Hi. So, we'll discuss today about how companies creates common stocks because it's a skeptic process, right? Might be you would have seen if you're a company secretary, then you would have seen that how companies creates common stocks initially, right? But now in next 5 minutes, I'll explain the process of how companies creates common stocks because it's a very important to understand the process of common stocks. Before that, I would request you to please click on like button and share this content with others. I'm very happy that I have seen your comments, guys. I would request you please do that continuously and share this content with others as well. So see that here, I'll explain that process, how companies creates common stocks and even other instrument as well. But in this particular 5 minutes video, I'll only complete on common stocks portion, right? So let's take the example here how companies creates common stocks. If you know that MCA it means Ministry of Corporate Affairs. It's a commerce ministry where if you want to register your company, let's say GMT Academy want to register as a private limited company, GMT limit private limited. If that GMT want to limit it as a private limited company, then mandate requirement is you should have a two minimum people so who can take the position as a board of director, and max to max you can allow 200 people to be a part of your company as a limited partners or limited private limited company. Private, it means private group of people, 2 or 20, 220 200, right? In that way. Now if I ask you question, if you let's say allow 200 people to be a part of that company, how will you ensure that ownership of each person? It would be difficult, right? And that's what, when you invite people to come at one place and to form a company, at the same time it is important to decide paid up capital. So what is paid up capital? Paid up capital, it means contribution by each individuals. Let's say just take the example, we have only two partners. One partner's contributed 100 rupees and another partner contributed let's say 100 rupees. Then paid up capital would be 200. So it means you can split that GMT company's partnership between two people 50-50. So that's how you can relate paid up capital, right? So and then once you decide paid up capital, to create the number of shares, again to create the number of shares is based on your paid up capital. If your paid up capital is 200, let's assume it, your paid up capital is 200, then you can decide the number of shares. But here again, to decide the number of shares, there is no scientific process. Depends on the two partners how many shares they want to create initially, right? They can look for let's say 2000 shares. When they create 2000 shares, it means per shares value would be how much? 0.2. 0.2 would be the face value of that particular shares. So it means initially they can create 2000 shares for 200 paid up capital. But again, 200, of course, at the time of registering company, they'll increase their paid up capital, let's say up to 1 lakh, 2 lakh, 3 lakhs, 10 lakhs, and accordingly they'll create the number of shares and allocate that number of shares to the each partners so that each shares represent the ownership of that each individuals in that particular company. And that's how they create the shares. And that created shares, you can call it as common shares. But before that, once you split or create the number of shares, you need to list that shares on ISIN. So it means you can again reach out to the depositories like NSDL and CDSL, deposit your number of shares, let's say 2000, and list those securities on ISIN. Once you list those shares on ISIN, so that shares you can call it as a common stock, and again you can transfer that securities to the each individual. It means two partners 50-50, whatever number of shares that you have. And then after your process come into picture where that shares represent the ownership of that particular ownership in that particular company. Each unit each unit or each number of shares that represent the ownership in that particular company. And again, you can claim for a dividend, and corporate actions and different events come into picture. And hereafter, let's say if company want to list that securities on a stock exchanges like NSE and BSE, they can come up with the IPO event, initial public offering, and again they only distribute the shares out of the total number of shares. So that process you can call it as a promoters who want to dilute their own individual contribution in that particular company, and to allow other people to be a part of that particular institution. Why they'll do it, why company will come up with the IPO, why company or promoters of the business will dilute their stake. So this question is for you, because this question recently was asked in the BNY interview. So I would request you to try it. Why companies will come up with the IPO event, why promoters of the business they'll dilute the number of their stake in that particular business, why companies will issue the preference equities in the market, what could be the prime reasons to issue the preference equities in the market. So these are the three questions which was asked in the BNY interview to one of my student. So you can try to answer it comment section. If not, I'll try to answer it in next session, right? So I hope now you got the idea about how companies creates common stocks. So there is no any scientific process. You can create a number of shares, as many as you can, right? Initially that depends on the promoters or person who is registering to that business. And then up to, you might see, you will have to take some regulatory approvals and all, and then you can initiate the further process. But yeah, this is the initial process which you would see how companies and why companies creates the number of shares. As I told, how means this is the process, and why it means to represent the ownership of each partners in that particular company. That's what to create the number of units of your capital is essential and mandate. So I hope you got this idea about now the equity creation process. If you are interested in bond creation process, just text me in comment section. I'll also generate content for that portion as well. And if you like this, as I said, don't forget to click on like button. And again, so we're gonna run the batch for investment banking, fund accounting, corporate action, private equity accounting courses. And if you are interested, I would say please contact us 7387609230. So you can contact to this number and get the information. 7387609230. And even if you're, let's say, career guidance, counseling, coaching, right, personal mentorship for across all the levels, even if it is from development side as well, if you want any insightful discussion with us, I'll provide you my link, personal link. You can book your session or slot and directly get connect with me on any topic. We can discuss, and definitely I'll guide you for that. Thank you. Enjoy. I hope you guys are enjoying this content and watch this as well. Thank you.